And we're back at it again.
What's up, Dante? All
How
right.
are you, buddy?
All right, man. Not too bad.
All right. This is Epic Lunch and Learn. We're here. Going to spend an hour with you guys, really just talking about knowledge about the mortgage business, real estate, and hopefully we want you to stay hungry for knowledge, and that's what we're here to do. So we'll start off. Vince, how was your weekend?
Hey, man. Not too bad. I took a little drive up to Wisconsin for a concert, but then I had to drive back to Illinois. So it is what it is. But it was all right. I saw you look like you hit the movies this weekend. I saw you bragging about popcorn. I'm assuming the kids wanted to go see Superman or something.
So my kids did want to see Superman. They actually did. They went with their grandmother. But I got sweet kids. They actually all their leftover popcorn. They made sure they combined it and gave it to Dad. Since I'm not really a Superman guy, so I wasn't in the building for that.
I got you. Well, at least they didn't give you back the change. They gave you back the popcorn. So the kids at least kept the money.
Yeah, they keep the money, but no, they gave me some popcorn, so that was really nice of them. Actually, this weekend was kind of a rare entity. I actually went to Woodfield Mall in Schaumburg.
You actually went to a mall?
Went to a mall. I haven't been to a mall.
Is your wife feeling okay? No Amazon, no boxes being sent to the house, nothing like that?
We were actually going to my brother-in-law's house, and he lives about a solid hour 15 away, and so that's kind of like the halfway point. Gotcha. So I was like, you know what, to break up this drive, why don't we stop and why don't we go to the mall? I haven't been there in over 20 years, and it was pleasurably. I was surprised at how many people were there. I mean, it was pretty packed. I mean, for me at least, I did not. I go to other malls and other venues, and they look dead. They look like hey, you should have got out while the getting was good. And I was pleasantly surprised. Like, geez, there's a lot of people here.
Yeah, but I mean, then again, too, right? You said you haven't been there in like 20 years. And granted, we could say maybe 5 or whatever, but in the grand scheme of things, that mall's changed. It's not really just a mall anymore, right? It's a super center.
Right.
There's grocery stores, there's a movie theater, there's an arcade. So it's a lot different than what that is, right?
Definitely a lot different. It's a situation where I believe it's still a place. I spoke to some people when I went to my brother-in-law's house, and they said, "Oh yeah, we go there, we drop off our kids and just let them run amok." I mean, so you have a form of babysitting. You have a form of the seasoned folks that want to get their steps in, right? They got their little watches. Yep. I got to get my 1,000 steps. So you do have a huge multi-generational facility in place that has a bunch of things. I guess the Pop Store or Pop Mart or something like that. I forgot what they're called. Some ugly little dolls that are very popular right now.
Yeah, you got me beat on that one. I've avoided having kids and having to go to that, but at least you got out of the house with the kids at the mall and everything else that goes with it.
You know what it brings? It brings a little bit of perspective. I'm trying to, I'm trying not to be just a caveman, Walden's Pond, sitting by myself in my thoughts. I wanted to kind of see the world, but it is fascinating to say the least.
Sure. Yeah.
Well, we were going to talk about today an interesting topic. We were going to talk about divorce.
Yep, that's the plan. I know you gave me a little bit of an outline. This is my second time on the show here, so I'm going to work to make sure I kind of stay on pace on that. And then, I kind of want you one thing. I mean, because I know we're going to do this basically for the next 2 months, just to kind of speak to your audience, kind of why we're doing this in a little more detail, because our plan is to really make this more interactive as we get going.
Yeah, that's true. And case in point, I told some of the people I work with today, hey, Epic Mortgage has a YouTube show, which really what it is. It's a YouTube show that's available on Mondays, 12 to 1. We hope people are listening and getting some knowledge. I think we're doing it to, really, that whole education. We want to bring knowledge, some real-time information that can maybe be important for people that are going through struggles, or to share it with other people that might be going through any needs or wants, and feeling comfortable with us and introducing the brand to them. I think it's good for us too. Us as loan officers, just being able to talk about some different topics and different strategies. Obviously, that's the one thing. When you're in the business, I never felt like there was competition per se, right? I'm never going one on one with Vincent Bertocchini, right? Yeah,
Right.
we're in different circles, different spaces, and we're just having conversations. And you bring up good information that I'm like, oh, I never thought of it like that, and hopefully I do the same for you. And then it just makes us stronger. So having conversations, keeping it interactive, I thought was really neat. We encourage anyone that has any comments or any questions, or definitely you can fill it out right here, and that'll allow us the opportunity to maybe answer some questions that people have. And and that's what we're trying to do. We'll do it weekly, and hopefully people will spread the word and get the information they need to get through the week.
Well, let's take that. Let's kind of get started. I want to thank you for having me back, and let's kind of look forward to doing this with you again. But again, the topic here today is about divorce and how we're going to handle housing, or how we handle housing during a divorce. And the real point of why I kind of brought this topic up with Dante is the point here is, even when like you're trying to purchase a home, you have to take the emotional attachment out of the situation to the property. There are different ways of handling mortgages throughout divorces, and that's kind of really what we're going to kind of discuss, the different ways of how to structure keeping the house. How do you buy the next house? Is the child support and alimony, can we use it towards the house, and different things of that nature. So I'm open to however we want to structure that. But, like we say, right, 50% of couples get divorced, and probably 40% of that have a house or kids involved. And there's things that always need to be covered. And for us, we're just going to bring the topics and touch on the points. And if someone wants to use this as a follow-up conversation, Dante will provide the Epic contact information at the end of this. And of course, if realtors want to use this to their clients that are going through a divorce process, feel free.
Yeah, definitely. We just had that podcast, and we were talking about mediation, and mediation is just one of the ways that you handle divorces, because one of the first questions is what happens to the house in a divorce. So who gets to stay and who gets to go. I mean, that's usually a big that should be the number one question, right?
It's the number one question, right? But then sometimes everyone gets aggravated and they put restraining orders and people get kicked out of the house before the time. Now, we're not going to get into all that. We're just going to get into, if I have an FHA mortgage and it's assumable, can I transfer it over to my spouse? Things of that nature. How can you structure a divorce decree to be able to keep the one residence, right? Because at the end of the day, if you have kids, you still need a house for them.
Correct.
It's not like you want to disrupt your children and then, we're both going to buy new houses. That may not be the best solution in today's market with the price of housing and the current interest rates. Because again, you have to factor the interest rate that you have in the current home.
Yeah, no, definitely. And one thing I'll add on to this, and it's very important that people understand, is divorce is very state specific. And I actually had a situation last year. I was helping someone in Georgia, and they have different rules and regs than us in Illinois. So every state, we're licensed in multiple states. We're a regional mortgage broker, but every state is different. So you do have to be mindful of the information you're receiving. You want to talk to an attorney because that's important. Let's go here, Vince. Let's go with we always talk about a financial team, right? You should have a financial team. Who would you say should be a part of the divorce team? Who are people that they need to be, using to get information?
Well, I would say that, obviously you need an attorney. You could use friends and family if you want just opinions, but an attorney is important.
Sure.
You can use mediation to avoid the attorney if everybody agrees,
right,
which is the easiest solution, right?
Right.
Those are two things. And then if you have assets, you need a tax person. And you probably
a CPA.
And you probably want your financial advisor involved in that. Now, for some, that may not matter. But then again, it may be important depending on what's there in assets. And then for those that may be teachers or police, depending where you are at an age, does the pensions come into play in the divorce?
Sure.
So that's kind of where I would sit on that, right? from a basic math, I mean, yes, okay, we got the real estate agent as well and the loan officer.
There you go.
So you got 5 people that you kind of need advice from.
If we were doing the Family Feud, I should have said, what are the top 8? And you nailed 5 out of 8 that I wrote down. I did divorce attorney, right? Obviously, you said that. Certified divorce financial analyst. I didn't realize there was someone, but I mean, that's basically like a financial advisor. Realtor, obviously, loan officer, therapist. Someone
Sure.
obviously from a therapeutic perspective. Estate planning attorney might be someone in play.
Yep.
I did a child specialist, of some sort, dealing with the child, obviously a change that's going to happen in the child's life. And then to your point, supportive friends and family, because obviously it is a traumatic experience. That's not what you wanted to happen. That's not what you were seeking to happen. And sometimes things do happen. And, I know sometimes with divorces, it's you got to be careful now. I'm like, is it a celebration or is it or is it sadness? Because some people are having parties like, thank God.
Without kids, it turns into a divorce party, right? It's a trip somewhere, right? Whether it's Vegas, Mexico, a cruise, or whatever, right? But when you have kids and it's something else, it's not that excitement. Because I mean, I remember doing divorce parties with some of my friends, but they didn't have kids. But we're in our late 20s, early 30s. Now it's a different story.
Yeah, I mean, obviously my family, I know divorce pretty well. I mean, pretty much every generation has had a divorce. I'm trying to be the first one not to get a divorce. But I've seen where, the trouble lies. I understand. And a lot of it comes with financing. What are you doing with your money? What are you not doing with it? Deceit, obviously, infidelity, obviously, what a topic that we're bringing this up, and we got the the CEO that has to resign from his position. Caught at the what was that at the concert of all things. You were at a concert. He was at a concert.
Okay.
Yeah, I mean, so just those situations do occur, and obviously, just it's just tough. So I mean, obviously, going back to what you said, the first step would probably be what happens to the house, and then if there is a person that wants to maybe stay in the house, to your point, we have to look at what interest rate changes that have occurred from when they bought the house to now that they want to, potentially refinance and remove someone off the, the title and the mortgage. Not to mention, we have to talk about income. Isn't income would be a concern, right? Debt to income ratio.
Correct.
Can you qualify by yourself, or did you buy that property with both incomes?
Yes. So I wanted to touch on that. I mean, obviously, income comes down to it, right? It's a 2-income household going down to a 1-income household when the divorce finalizes, right?
Correct.
And us being in the industry for so long as we've been in, we've seen a lot of different divorce decrees and how they've been structured over the years. But then again, too, we got to remember that when alimony and child support is issued during the divorce, that obligation is an expense now for your ex when they try and do something outside of the home or trying to buy their place. And I kind of want to just like bring an example up, and this is just an interesting way. And then we could kind of go through how conventional divorce looks at it and how FHA looks at it from structuring a divorce decree in terms of the court directing the bank how to use the home. But I had a buddy who had to pay child support, and he said, instead of you selling the house, how about I pay my child support as the mortgage payment? And when the children turn 20 years old or 21, he made it a little longer, then we'll put the house proceeds in a trust for them. And I thought it was interesting, but his ex-wife wanted no part of it. And again, it went into the point of the emotional attachment that goes through it, right?
Sure.
Because in the end, he's saying, hey, I'm going to pay for the house. And when this equity position is paid for, we're going to transfer that to our kids. So just kind of one of those things. And now if you would like, we could talk about structuring in an FHA, structuring in a divorce decree, and how we would do that legally.
Yeah, like I said, this is a situation where, ultimately it can be very emotional for both parties or for one or the other. And so sometimes we're not And that's why I think the financial team is important, this divorce team that we talked about, because we have to, see if we're doing what's right. I mean, sometimes, you just want, I know from a divorce situation, you just want to cut, I want to be severed away from this person.
Right.
I don't
Of
want them
course. I
around.
mean, there's anger and everything else that goes with it, right? That's why,
Exactly.
unfortunately, you're having this decision to make.
But
Yeah,
don't be short-sighted, because sometimes the financial situations, like, you're walking away or you're saying no to, could actually benefit you or help you.
correct. Right.
You
And
know
I
what I
mean,
mean?
that's kind of like when my buddy put that proposal together, I'm like, it kind of fits. But again, it is what it is, and that's what it was. This is just, off the cusp kind of different options, because that's the thing, right? When the attorneys and the real estate agents get involved, their option is only their direction of selling a house or being involved of how to structure it. But at the end of the day, you have to sit down and figure out, how do I really want to look at this financially? Like, the divorce is going to happen, right? But how
Right.
do I structure it where I can maintain what I have?
Right. No, I mean, so going back to that one divorce scenario, it was where the husband allowed the wife and the kids to stay in the house until they could sell the house. And so he started paying the child support. But to your point, um, I believe it's FHA. I think you need 12 months of proof of alimony.
To use it as actual income to qualify for whatever it would be.
Correct.
Yeah.
So even like, eighth month in that he's paying this alimony, I couldn't use the income. And so obviously the market has changed. The values of, value prices, purchase prices have gone up, and it made it a challenge where I can't even use this income. So we had to get a co-signer. Her sister stepped up and helped her do the purchase, and said, hey, we'll have to come back when we can use this income, and then we can refinance at a later time.
And
Um,
restructure it.
100%. So it is tough in those regards, especially based on credit score. I mean, obviously, I think conventional, if I remember correctly, is a little bit more lenient. I think it's 6 months of child support.
Yeah, I would say the 6 months on the child support. FHA is always a little bit harder when it comes to income, because they're looking for more consistency of it being there. Same thing
Correct.
with tax. Same thing with just traditional loans. They want 2 years of tax returns, and we can get away with 1 year on conventional stuff. So I would say that that's the 6 month rule at the very least. And I think some of the times you can get away with 3 months of child support payments. But then the child support payments push you that much longer of being able to move forward to what you need to actually accomplish.
Right.
Right? Because that's another 90 days after well, where do I go? How do I do this? The other things that have become popular too is nesting.
What's that?
So basically, where the husband and wife agree to keep the one house,
Okay.
and then they go live in an apartment in the other. So say you have the kids 4 days a week, the kids never move from the primary house.
Mm.
And that's the exes are just transitioning 3 days into one, 4 days into the other.
Oh, wow.
And they're potentially renting 2 separate apartments and having the house, which then you basically have 3 households. And that's,
Yeah.
I mean, that's like what I mean. That turns into a crazy expense from the standpoint of, well, what are we just doing? Well, we couldn't agree, or we have $200,000 in equity in the house, and I want my money, right? And you forget about the standpoint of, I still have kids to raise. We may not be a unit, but we still have the next 10 years that we have to figure out what to do with our children. So sometimes the nesting thing comes into a play, and it's basically you've got a revolving door. You don't know which house you go to, right? You spend 4 days in one with your kids, and then you spend 3 days out of the house, and then you go back to the house. But it's nice for the kids because nothing changes.
Exactly. I just, especially, I think, where we're coming from, obviously we're coming from pandemic rates. A lot of people have bought homes, during that time frame. And if they are now going to, go ahead and do this divorce, I mean, just the debt to income ratio, the purchase prices have increased, cutting from 2 incomes now down to 1 income are major things where you're going to have to kind of pause some of the emotional side and really look at the number side and see if it makes sense. Because I really have seen in a couple instances now that you got me thinking, debt to income ratio has been a major factor. Even if you have a 700, 800 credit score, but now you only have one source of income. Or what about the stay-at-home mom, right? The
Correct.
stay-at-home mom, all of a sudden, oh, we're getting a divorce. Now I got to get back into the workforce. I don't even have a 2-year work history. So, FHA has to become a play, because we might have to go back in time, if possible, to verify that employment. So, it's those things that you have to kind of consider. And that's why you have to, have a financial team to kind of work through some of those, nuances of like, okay, what would the projected mortgage payment be?
Yeah.
I was on a call with, a couple that was actually, looking to get divorced, and, and they were doing the right steps, so, Amy, I see here, Amy on our chat, she's like, what's the first step when approaching a divorcing couple as a real estate pro? Is just to get some of the parameters down, right? Of like, hey, these are some topics that we need to maybe talk about. This might be as, what I mean? What would you say to that?
So the one thing I would bring into that, just because rates have been low historically, they're probably in a low interest rate, right? And we don't talk too much about this in our industry of assumptions, but the first thing would be to find out if they're in an FHA loan or a conventional loan, and is that mortgage assumable from the standpoint of the one versus the other, right? Because then someone's taking control of the house, the payment is being done, and the rate's staying the same. Another option would be on her end for Amy, and thanks for watching. Financially, have them sit down with a mortgage person to figure out the standpoint of how do they qualify? How can it be structured? And like taking that from the standpoint of, let's say the wife is the stay-at-home mom, but the husband makes all the money. And he makes so much money where he can afford 2 households. Is it possible to convert the current home to an investment for him and then purchase another primary residence for the children? And then this way there's a write-off and there's another benefit. Again, I'm getting ahead of it, but it's all a plan of planning, right? It's the same thing when you go to buy a house. You can go online, look at houses and say, hey, I like that house. I want to call a realtor up and go see it. But if you don't qualify for it, there's no reason to go look at that home. The same thing with the divorce. How do we structure it financially, right? And you touched on it. Debt ratio and expenses are so high in today's market that it's very hard to do things without 2 incomes.
Let me ask you a question. This was something I wrote down as a note. Do you think it's better to sell the home before or after the divorce is finalized?
So, I mean, selling the home before the divorce is finalized to me is the easy solution. And usually that means there's not kids involved. When you throw the kids, when you have kids and you have a home, you have schools that you're going on. A divorce takes 6 months to a year from start to finish. Sure. By the time the attorneys get involved. So, structurally, and no one ever wants to be in a house with a spouse that you're not going to be with anymore, and you already decided to make that move of being divorced. Usually someone leaves before the divorce is finalized, right? And that comes down to being able to do this the easiest way and the way that everyone agrees. But again, if you own the home and you have children, realistically, the first thing to me would be to keep the current house if it fits the needs of the family.
One thing on a sidebar to that, a question that was brought up when I was talking to the couple was appraisals. Obviously one of the things, both are mad at each other, both don't trust each other. They want to get an appraisal done. And I was like, you can get an appraisal, which is fine. But that appraisal doesn't tie into me because they're not through an appraisal management company, which we call AMCs.
Sure.
So, so that also, something you have to kind of factor in. So here you are.
I'm sorry. I so want to touch on that, right? Because
go ahead.
We know that an appraisal is not going to do us any good at that point in time. But you know who wants the appraisal done?
The attorneys.
There you go. That's exactly right? They want to know how much money's sitting around in assets and how things can be divvied up, which goes to the entire point of, we said in the beginning, at least I did, having to take the emotion out of it is the most important thing, because that attorney's not calling you 2 years later saying, hey, how you doing, right? Like it's not a relationship that you ever want to go back and revisit, right? Like, oh, well, yeah, you did my divorce and we paid you X amount of dollars, right? They're there to take the money that you guys built together. We're here to try and give you ideas or options of how to be able to keep what you've earned together, and yes, split it up, but split it up in the most efficient way and the most financial advantage to both of you.
I've always told people, and this is kind of where I go. I say you're your best financial advisor. You are the boss. You are the CEO of your brand, of your life. And don't ever forget that. I mean, I'm a professional, and my job is to give you information to help you make decisions. But you're at the end of the day, you got to do what's best for you. So, I mean, case in point, gather the information and then you tell the attorney. Don't let the attorney tell you. You tell the attorney what you want them to do, and take it from there. I feel like sometimes they empower too much of these attorneys to kind of well, here, you handle it all, and they don't get involved enough when it's their life.
True, right? Like, I mean, and again, like we talked about this, if it's structured in the divorce decree on how to handle the property when there's equity involved, the lenders give pricing advantages to your rates, because sometimes, depending on the loan program, you don't get hit for cash out on a refinance transaction during a divorce. So you can restructure the loan, take the equity out, split the equity, and then redo the mortgage. And the attorneys are not involved in that, how that goes, other than structuring the decree.
But you let the emotions get involved, and then all of a sudden you're going to be doing two different appraisals. You're going to
Not
have
only are you doing two different appraisals, right? Now, what if one comes in at one value and the other one comes in at the other value, right? Now you're fighting
right?
about what value we're using, right?
Correct.
And again, like I said, it gets messy, it gets complicated. And at the end of the day, you both have to go live somewhere and you both have to go spend money to live, right? And at the end of the day, we want to structure the finances to the most efficient and inexpensive, or let me rephrase, the most efficient way without increasing the monthly expenses. Because like I said, if you have kids, you might not be together, but your finances are still together.
Co-parenting.
Yeah, co-parenting, co-nesting, whatever we want to call it today's date, right? I mean, It's just what it is.
Yeah, I mean, it's the damage is already done. I guess, in my estimation, you've already said, "Hey, I don't want to live with you anymore." But I think we're coming from it from a numbers perspective versus the emotions. But you really have to kind of simmer the emotions and make some smart decisions, because to your point, even on the appraisals, now you're spending two appraisals. What if you have two different values? Now you're going back to the table again, renegotiating twice. It really becomes complicated in that standpoint when, all you had to do was just, choose the lender of choice and order the appraisal.
True, right? And I mean, and just to kind of touch back on the equity in the house, if it's decided in the divorce decree, and make sure I'm stating this correctly, on FHA, on conventional, if it's stated in the divorce decree, the proceeds from the refinance can go to the spouse if that's how it's written.
Mm-hmm.
And it also allows you to leverage up to 95% of the property value, which is different than just taking the cash out of the property at an 80% loan to value.
Is that straight out of the guides?
That's out of the guides from my head. I was looking for you to verify that I was correct on that, because what the banks look at it is, because since husband and wife have been in the house, mm-hmm. It's your equity position already. And since it was court ordered for the house proceeds to be split, one or the other, whether it's FHA or conventional, will allow you to use purchase LTVs to pull that cash out.
Sure.
As long as it's worded in the divorce decree, which then clears up a little bit of what are we doing with the equity position. You go ahead, you keep the house, I get my portion of cash, you get your portion of cash, and the loan's redone just in the one spouse's name then. Mm-hmm. So, again, you got to have the finances to structure it that way.
Let's go into, just roles. Roles into the legal side of it. What do you define as the divorce attorney? What is the divorce attorney, doing for the people? What is their kind of role in this?
Well, I mean, their role, I mean, in my opinion, is they're basically there to just mediate it, right? Like they're there to negotiate, essentially. How do you want this? What are you looking for? What is it, right? But I mean, at
Yep.
the end of the day, the topics of conversation come up to from the attorney. What are the assets? What are we doing with the house? Do you feel like you're entitled to alimony? What do you want to do about child support, right? Those are the four factors of what go into the divorce. And where the attorney falls in is to how much you're looking to do or how much you have in terms of assets for them to be able to take. Because you can go find a mediator and just go file your own divorce decree and just sit down and come down to the terms of what you need to do in order to become divorced and not make it a long, dragged out process.
Let's talk about that a little bit. I mean, are you familiar with mediation versus litigation?
Well, I mean, at the end of the day, just by the term, right? Litigation, you need an attorney, right?
Correct.
Mediation is the both of you sitting down trying to just negotiate your own terms between each other.
Correct.
So mediation is obviously cheaper and quicker.
Yeah. No, and normally what's interesting is the courts actually try to recommend that first.
Correct, right?
If you go to court and, hey, I have a dispute with you, they're going to first say, have you tried mediation first? Because, in the litigation side, there's going to be a winner and a loser. But in mediation, maybe there can be 50-50 where you both kind of win.
And the judge is sitting there like, of course, that's what he wants you to do, right? Is to mediate. So this way you're both in the agreement of what's going on. And we're just talking about what you're doing as a couple, right? Now, if you're trying to mediate, what are we doing on our visitation schedule for the kids? And I don't have kids, but I mean, I've seen a lot of divorce decrees. The biggest thing I want to say to that is, how do you figure out a routine that works? And I want to pause for a minute and say what works when your kids may be 4 and 5 as an agreement of visitation and scheduling doesn't work when they're 10 and 12 or 12 and 15. So yes, obviously you want both parents involved and you want the structure for your kids to have both the father and mother involved. But then again, when you get into 5 days out of the week, these kids have a full-time job.
Right.
Going to school is a full-time job, right? At 8 o'clock in the morning, sometimes they start at 7. They get done at 3:30. Then they got sports or whatever. And I'm talking as they get older. You're in high school. You're playing basketball or soccer in the evening. But no, you're supposed to go do dinner with dad on a Wednesday. And you're pulling yourself out of that environment. So, that's where the courts and the mediation really come into play.
It does. And you got to think about the kids. I mean, to your point, I mean, I was at Woodfield Mall, right? I'm talking to parents that say, yeah, I just dropped them off and let them play around. They want to play with their friends. They want to hang out with their friends. As they get older, they don't want to spend, all nestled up with mom and dad. So, we're going to have to, have that reality that things will change as far as the timing goes. For sure.
Sure. Right. And then that's the thing too, right? I've seen clients come back. Well, we're going back to court every 3-4 years. You're going back to court fighting with your spouse, their ex-spouse, about visitation for the kids because the assets are already gone. They're divided. The house is already divided. Why are we going back fighting about things of that nature, right? Which comes back to the emotion of the situation. Now, don't get me wrong. If the father or whichever, there is no co-parenting involved, and you're a single parent, go do whatever it is you need to go do, right? I was raised by a single mom, so we don't need to go to that point, but sometimes it goes there anyways, right? Sometimes there is no other involvement from the other parent. And if that's the case, there is no mediation. There is just litigation.
Yeah, I mean, and, to your point, if one spouse refuses to sell or cooperate, maybe having a chance to have that conversation through mediation where someone's trying to talk it out with them, could help them maybe change their mind and give them a little more perspective, because sometimes you come in there, with the horse blinders on, where you're solely focused on what you want and you're not seeing the other side, because litigation is 100%. There's going to be a winner and there's going to be a loser. And
Sure.
you may lose everything that you even wanted to get in the first place.
And then some, right? Because then I don't want to say the asset, but then you're seeing the attorney bills pile up, right? If your attorney bill's 10 grand, you could assume the other person's attorney bill is 10 grand. And when you take a moment and you really look at that, wait a minute, we're spending $25,000 in costs to an attorney. That was the mortgage payment for 1 year for the entire house, right?
Yeah.
Or that's the rent payment for one parent to maintain the other one to be able to keep the house for the kids.
Mm-hmm.
And that, like we said in the beginning, it's the emotional piece of it, right? Because at that point, you're just fighting.
Yeah. Speaking of emotions, what happens if one spouse stops paying the mortgage during the divorce?
Yeah. I mean, and we see that with credit cards and the whole thing, right?
Sure.
If you damage each other's credit, you're damaging your own progression of what's life look like after the divorce. That's the worst thing to do.
It's capital.
And it happens all the time, especially with authorized credit card users.
Yep.
You have a line of credit. You have a Visa card with a $10,000 limit. Your wife has the same exact card. She goes to the store, spends the 10 grand, and then forces you to pay the bill because it's in your name. Right. You're going through the divorce, and the finances change, and your credit gets wrecked, and her credit gets wrecked because she's an authorized user. So if you don't pay it, it affects her credit as well, which is the same thing in the housing thing. We see houses go into pre-foreclosure during divorces and things like that, right? And again, it's just destroying the other person's credit profile, but in the end, it's affecting both of your credit profiles.
Yeah, joint liability dangers. I kind of wrote down as a note, like you got to be careful of joint liabilities. And to your point, how can divorcing couples protect their credit during the process? I said, you can remove somebody off of an account, correct? Or maybe close that account, or what would be the best way you would say?
Well, so to remove an authorized user, the only one that can do that is the actual borrower or primary account holder, right?
Correct.
The other thing you could do is freeze the credit profile so you can't obtain any new credit.
There you go.
And that way you know where the cards are and you know what accounts you have. Illinois obviously is a spousal state. So until the marriage is over, if anyone's buying property, both spouses need to know. I mean, I ran into a divorced client once before, and he was trying to buy a new primary house before the divorce was finalized. And I'm like, you can't do that. You can buy it as a second home because of the distance, or you can buy it as an investment, but you can't purchase it as a primary house in the state of Illinois. If you're still married, your spouse needs to sign off on certain documents.
Correct.
Which kind of goes to the other point we talked about. Can you buy a house before the divorce is finalized? In Illinois, you potentially could buy another house as a couple before the divorce is finalized, using both people's income, as long as you're both willing to sign off on the documents. Right. And then when the divorce is finalized, you can go back and do a quitclaim deed with the property being allocated as to how it's to be divided up in the divorce decree, and then split it from there. Now you're both in separate houses. Now the divorce is final.
Yeah, I got a client I'm working with right now where her and her ex-husband divorced, but they bought a second home together. And so now the second home is still in her name. And she's like, well, how do I get rid of it? And, spiteful on both sides of the fence, both their credits, had gotten beat up pretty good.
It got damaged over.
Got damaged over the whole divorce situation. So now, consequently, he doesn't necessarily qualify to do a refinance to get her out. And I think a lot of people are experiencing that right now, where you have these situations where, hey, I'm not really paying on this. My, ex-husband's paying on that. That's his responsibility, but it's still showing up on your mortgage or still showing up on your credit. Well, how do I get it off my credit? Well, he's got to refinance it to get it off. That's the only way.
That's correct.
but the divorce decree shows that it's his responsibility.
Nope.
It doesn't
The
matter.
bank doesn't care, right? Because sometimes,
Correct.
unfortunately, you can read a divorce decree and it could say the wife has the house for the next 5 years with the kids, and within the next 5 year period, she has to refinance and put the house in her name. Well,
Correct.
the court's giving it that amount of time because, like you said, what if it was the stay-at-home mom? Then now she has to go find a job. Well, now she needs that year or two just to be able to attempt to go get the mortgage.
Correct.
And in that situation, that divorce decree is written the right way, right? Giving time to allow the stages of life to progress or the job time to progress after the divorce to structure those options is the right way of structuring some of that stuff sometimes.
Yeah, I mean, I think overall what we've been talking about is just communication. There has to be more communication in these divorce situations. It can't be as emotional as it maybe once used to be, just because the whole landscape of just finances have changed, and
Yeah.
so you can't just be like, oh, forget him. If you were using dual income to make that happen, people are being affected now because of just the higher interest rates now. They're not overall historically higher, but they're higher from where they were a decade ago. And we have to be, acknowledge that. And so we have to think reasonably of like what makes the most sense, how we can make this work. And especially to your point with kids involved, it is a tough situation because you really have to guide lightly. Tread lightly, definitely in a situation of like, you don't want to shake them up and affect them. I mean, obviously they're already maybe emotionally affected and you have
Sure.
to consider that, but you also too have to make sure, hey, we're going to try to keep everything as smooth as possible,
Yep. I
with
mean,
make the payments and stuff like that.
not only that, right? And then, like you said earlier, who's on the team? Like, who do I go to for advice? And part of that too is that your team has to be involved earlier in the divorce in terms of being able to help you structure those options or what looks best.
Exactly. What would you say is the best way to divide real estate, the equity fairly? What would be the best way? Obviously, we talked about appraisals and how they can, you could have the same house and two different appraisers go out there and still have different values. I mean,
Right.
that's
I
just
mean, just at the end of the day, right? We hope that the two appraisals will be within, let's call it $10,000, right? If it's
right,
if it's a huge difference, then something was off, right? But at
right,
a dollar amount of 10 grand, that's minor. I mean, I know we said now we got the attorneys joking about over the 10 grand. We're kind of joking about that, right? At the end of the day, the house is pretty much, what your house is worth.
sure,
Um, it comes down to, well, if I give up the house here, how do I wind up with another house? Different situation without the kids. With the kids, you want to maintain one house. The other point of looking at it is there a way to convert the one house that's the primary house? And let's say, the husband is the primary wage earner, and you can structure it where there's a tax savings by making one of the properties an investment for him to reduce his tax liability because he's paying child support and he's paying alimony. Like, you still have to work together. And don't get me wrong, never would you want to be able to say, well, I'm giving you the tax break, right? But like when you get divorced and your kids are under 18, someone's filing the exemptions for the kids on the taxes, whether you do it alternate years or whether you wind up paying it from just one person, right? So it's the
right,
same thing with the housing and those things. But the divvying up the investments and whatever the assets is, to me, it's a 50-50 split. What we had during the marriage or what we earned prior to the marriage, if it's a substantial difference, then you kind of work that out. But if it's the assets that you gain together, you're just splitting it down the middle. I mean,
yeah,
we watched the Ramsey show, right? I mean, at the end of the day, there's not mine and yours, it's ours, right? And if you get
correct.
divorced, then it turns into mine and yours.
Right. So you're looking for potential buyouts, and then obviously buyouts could be through a refinance, right? We could, if there's a certain number that's been agreed upon, on a certain number that they say, hey, if the value hits at least here, this is what I'm going to pay you X. I think that's probably a way to be fair. Hey, we don't know where truly the value will come in. Every appraiser is different. Trying to have that understanding out there, let that permeate out in the world that, you could literally have two appraisers go out at the same property and still come up with two different values. It's
True.
just not an exact science.
No.
Don't get me started on that. I can, that could be another topic for another day, appraising. But
and that's a topic for another day, right? Because
yes,
it's hard to change an appraiser's mind once he puts the ink to paper, right? Because they have to admit that they made a mistake, essentially,
correct,
right? And that doesn't happen.
Correct. They want to maintain their employment, their 1099 income, and so they're not going to raise their hand and say, "Hey, I screwed up.
I did it. It was me.
It was me."
It's not going to happen.
Right. Very rarely. So, and then or look to sell. Sometimes, unfortunately, a new beginning. Just like in a form of a death, situation where hey, new beginning. Maybe it's time to just sell the place.
Absolutely. I mean, there's nothing wrong with taking the money and starting over and just be done with it as well, right?
Correct.
I mean, it's all pieces of it. And that's exactly what it is. It's all pieces, and how do I structure those pieces, right? How do I put the puzzle back together?
Yeah. I mean, some of it, from a sale perspective, it seems like that's the cleaner way. That's just the cleanest. Hey, we're going to sell this thing and then move on. Speaking to one of my clients, and that's what she did. They sold the property. She took the proceeds, and that was her down payment on a new home.
Yeah, the only thing I have with that is when you look at the money situation that gets burnt in such a short time frame, and what I mean by the money that gets burnt, and don't get me wrong, we're all professionals, we all give advice, but you're doing mortgage loans, you're doing real estate commissions, you're doing attorneys and everything else, and you're both buying a house instead of trying to figure out how to one of us, right? So then when you look at it, you wind up spending 15 or 20 grand just to restructure on each side. So then it's $40,000, right? Was that worth it, or could we have looked at it differently?
That's a case in point. Yeah, it's true. I mean, it's just you just got to talk it out and work it out. What I wanted to also talk about is this. Says I wrote down this note. How does a divorce decree impact mortgage qualification? What would you say about that?
Well, I mean, at the end of the day, the lender is going to ask for the divorce decree to see, on both sides. If you're using child support or alimony, they want the divorce decree. If you're recently divorced, they want the divorce decree to see if you have it as a liability, which goes back to the things we talked about earlier. Financially, you both have to be able to qualify for a new place. And that alimony and child support payment may make it where your ex-husband can't qualify for a property.
Yeah, exactly.
And then sometimes people don't look at all of that when they get started. They just start jumping onto the numbers and divvying things up. So, I mean, that's why the divorce decrees are needed, right? I mean, the banks are going to ask you for a divorce decree, even if it's 4 years later. They're going to ask for a divorce decree because we have to put down on the application the age of the dependents if you have children under the age of 18.
Correct.
So, I mean, that's kind of the pieces that show that there was a divorce.
Correct. I think if some are out there listening and you're wondering, like, well, why would they bring up this topic? It's kind of an interesting topic. It is one of those things where, and I think we're going to bring up more topics like this. These are the times when you want to speak to a loan officer. Sometimes I think in theory, consumers don't know when to reach out to us. They think the only time to reach out to us is if I know I'm buying a house, but it's when changes in your life occur. These are the moments when you need to have that financial team, and we'd like to be there for you. And so this is a change in your life that's, that if it's going to happen or if it's currently happening, this is when we step in. This is when we can help you, give you our knowledge, our expertise, our years of experience, and help the transition as smoothly as we possibly can. We can make it happen for you. Wouldn't you agree, Vince?
Yeah, I mean, that's kind of why we discussed the kind of doing the show. We're just doing off the topic conversations of real life experience, right? You may watch this video today and you may not, hopefully no one has a divorce coming up. That right? I know this show doesn't cause you to get divorced by any means, but if the conversation's sitting there or the things and the thought process is in the back of your mind, 6 months from now, you may remember this conversation that we had of Vincent Dante just kind of throwing around topics of what goes on in real life. And you may come back to that, and we might have gave you a couple pointers here or there, right? And that's exactly it. The sooner you get the professionals involved to your situation, the better, right? It's the same thing as when you buy a house. Like I said, know what you can qualify for earlier in the process before going to look at a house that you might not qualify for. It's the same exact thing. The more preparation you do to something, the better it is for everybody involved.
And let's just, for people that came in late or not, I wrote down top eight professionals that I think you should have in your on your team. So, I mean, one obviously is the divorce attorney. That seems like it makes sense. Some type of financial planner. Talk to your financial planner. Who can talk about asset protection, retirement accounts, et cetera, et cetera. Obviously, a realtor. Maybe one that specializes in divorce. A realtor that can definitely help you and guide you, let you know. You can also do CMAs, right? CMAs is a comparable marketing analysis, so they can give you a guide without having to order an appraisal. Someone that can give you some expertise of what projected would be, so you can start planning the money. A mortgage broker like ourselves, just having access to all the programs. We have the ability to help you in whatever situation that you're in, whether you may have a low credit score, whether you can't prove your income, whatever the case is. It gives us an ability to be able to really look at the landscape of products that are available to you and let you know what your options are. A potential therapist or a divorce coach may be important to you, just to kind of set you straight. An estate planning attorney, potentially, that might be a pro, that your new life isn't so tangled. It can help you, get everything structured from powers of attorney, changing beneficiaries. Child specialist, obviously, we want to take care of the kids if they're kids that are involved. And then lastly, your supportive friends and family, someone that has a support system as you're going through a trying time. We are sympathetic, but we just are, but we, especially in our position, are just trying to get the numbers situated that makes sense for everyone.
One more to your list that I didn't hear either one of us say: life insurance policies or your life insurance agent. So that's the one thing I think we missed, right? I mean, just in the end, if you wound up getting divorced and there's alimony, there's child support, and something happens to that ex-spouse and that income stream ends, where and how is it getting replaced? So that one's got to be collectively for both sides.
I like that. I like that one. Well, yeah, and that goes with beneficiaries too, right? I mean, obviously, beneficiaries. So we got about 7 minutes left, of the Epic Lunch and Learn. We can do some Q&A. We could answer some of these questions, or at least attempt them.
Yeah, let's try the attempted questions. I mean, that's what we want. In the end, that's what we want. We want the interaction instead of me and you trying to brainstorm out little ways of throwing scenarios up to the audience. We want the interaction.
All right. So Jeff wrote, how do you build trust with both parties during a high conflict divorce?
So I'm gonna take that from the standpoint, you need two separate agents. If your previous client comes to you and says, hey, Tim, I'm getting divorced, in this case, Jeff, I'm getting divorced, your better bet is to say, hey, I have no problem doing this for both of you, but I want to bring a secondary agent in. Even though your wife trusts me because I'm the one that bought the house with you guys, I want to bring someone else in because this is emotional. There's attachments. There's going to be conflict, and I don't want to be involved on both sides of that. And I think that builds more trust than just saying, oh, now I'm going to do both sides of this and buy two different houses. Because it takes a step out of it, of you're not just doing it from a business standpoint.
Next question. Thanks, Jeff. Next question from Richard was, how can lenders work creatively with alimony or child support income? I don't think there's really a creative flair on alimony and child support. It's kind of is what it is. These are situations that do occur in the guidelines. So we have to kind of adhere to the guidelines and do what we're told. So generally on FHA, it is 12 months of proof of some type of alimony. And then conventional, like I said, is a little bit shorter term, about 6 months. And then, but it's just one of those things. But I don't know about a creative way, Vince.
No, there's no creative way, right? Because, Unfortunately, there's no creative way on that. The only because the lender's going to ask us for the divorce decree. They're going to ask us for the court order to show the child support. And then they're going to ask for proof of payment that the other party's receiving those payments.
Correct.
So, there's a lot of paperwork that becomes involved when you're documenting the child support income as well.
Correct. I'll go with Anita's one. This is kind of good. How do you pitch a referral squad idea to local attorneys or mediators?
In terms of like that team?
Yeah, I'm assuming that she might be a realtor of some sort. That's where she's kind of, maybe that's the direction she's going on now.
Yeah, and that makes sense. Because we even said, is this something that, we put out to real estate attorneys and put out to agents, right? So it would kind of be the same thing. You're building your team of who you're going to refer to. But if you're taking the divorce in general, and let's just say you decide to target that market from a completely sales topic, right? You're going to want to bring that team with you on like that initial call. Like, here's the step for here. Here's the step for here. Making it an all-in-one stop. Like, hey, we got your side covered.
Yeah, I think for Anita, the mindset would be develop, if you're going to the divorce attorney per se, if you already have like a plan or a stage, here's this necessary stages that I've seen. Maybe you've had an experience with a divorcee. Hey, stage 1 was this, 2 and 3, and show where you can fit into the equation. Whether you're a realtor or you're a loan officer or whoever you are, that would be an opportunity for you to, pitch a local attorney to get, to be referred to and say, hey, I definitely understand this. If you have any type of certifications, obviously in this realm, that would also go a long way too.
Let's put one little spin on that. Let's say your previous client comes to you as the realtor and they're saying, hey, me and Bob are getting divorced and we need to sell our house. That would be your time there to be able to say, well, here, let me help you here's my package of people that I've used to put this together to help the situation and to help you through it.
Yeah, no, I love that. I want to, we'll try to get to more questions as we do this every week. Appreciate you. Those were kind of really good ones. Before we get out of here, Vince, let's just go over some of the contact information and.
Yeah, man. That's all on you. Obviously, I like the whole Epic Mortgage thing. I'm part of the team here, but it's your call, it's your audience, man. You go ahead and run with the contact information. Obviously, I have an email as well. It's vince@epic.mortgage. It's there. But again, I'm on Dante's team here, and we work with him in the office as well. I've been, like we said before, I've been doing this for a long time too. So, but go ahead, man. Let your audience know how to reach you and how to watch us on YouTube.
I appreciate it. Yeah, we're on Epic Spotlight Mondays at 12 p.m. Central Time to 1 p.m. Central. We try to respect that. Hopefully you're at lunch, about to get back to work as we are as well. So 12 to 1 on Mondays, we're here. This is our YouTube show. Please like, subscribe, and share with friends and family. Let them know. We'll talk about different topics every week. It's the Epic Lunch and Learn, and you can find us on the channel, the YouTube channel, Epic Spotlight. We do have podcast interviews that come out usually Wednesdays and Thursdays, so be on the lookout for that. And then I usually answer a question or elaborate on a topic on Fridays, and so we try to send out notifications. So make sure you hit that bell so you get notified when Dante answers a question on Fridays as well. So we try to give you stuff on the channel that will definitely hopefully enlighten you and give you the knowledge that you need. And you can always reach me at 708-905-5300. That's 708-905-5300. It's your dreams, your goals. Let's plan together is the motto. That's the tag. That's the office line. And then obviously my email is Dante@epic.mortgage. There is no .com. So if you send it .com, you won't get it. You won't get a response. So it's Dante@epic.mortgage. And we'll be back next Monday. Any insight of what next week may bring?
Oh, yeah. Actually, I wanted to touch on that, but you kept me to stick into a task and an outline. The Federal Reserve meets next week. I don't anticipate them cutting rates. I do anticipate them still doing 2 cuts, one in September and one useless cut in the end of December. So that's just my take on that. I believe we will not get a cut on July, and there is no meeting for August. So that's just my take. I believe the Fed meets Tuesday and Wednesday of next week. So we'll see what we get on Monday morning. We can prep, and you'll know whether or not Vince was right come Tuesday.
I love that. That's going to be exciting to talk about. And I did do a little pre-research on that already because I was curious on how many Federal Reserve chairmen have I seen in my lifetime. The first one was only for 2 years when I was born, so I didn't even remember him. But predominantly was Alan Greenspan, Ben Bernanke, Janet Yellen, and then obviously Jerome Powell. Currently,
you got one more. You got the Volcker guy. Come on, you got to
Volcker.
remember.
Oh, Alan Volcker, right?
Yeah.
Okay, so so what was fascinating to that was I've never seen, and maybe maybe I was too young. I just haven't seen the. I mean, I've never seen an administration, let's just say, put the pressure on maybe Ben Bernanke, but Jerome Powell's got major pressure, and they usually line up behind him and root for him. But in this situation, they are starting to get out of line and say things and put real pressure on them.
Absolutely right. Don't want to make it political. Obviously, we're over our time limit, but let's be honest. Trump selected Powell too, right?
It is. That's right? The funny thing. A lot of people don't know that.
You get picked by that guy, and now he's beating you up like you're Buster Douglas getting hit by Mike Tyson, right? I mean, it's essentially what it is. I mean, and we know rates have to come down. We can't continue this, but they're not coming down to. I mean, I hope they do, but I'm not going to say never. If we get to let's call it 5 3/4, we'll have a tremendous opportunity of restructuring debt for people, and there'll be a very, very big market. There may be as many hopes and dreams as you think you want. We're not going to see under 4%.
Correct.
So just keep that in mind. And I don't want to get into rates on this. We'll sit here and talk for another 2 hours.
Yep.
And we already told our audience that we were going to end the show. So I appreciate being here. I look forward to next week, man. Thanks again for the time.
Hey, appreciate you. See you next week. And thanks everybody for listening. It looks like we had a great crowd today. And so we'll be back better than ever next Monday. Take care.
Take care. Bye-bye.